Blocksquare provide the infrastructure for companies to be able to enter into this market in a couple weeks instead of developing their own tech.
One key point that people don't understand here is that while inflation is rising, real estate is a good hedge because it rises with inflation as well. It's also growing in the market. If there was no inflation, real estate would not grow that fast.
In real estate, so you're always basically putting aside the exact amount you will need in X amount of time. And if you're able to liquidate that afterwards quite easily without too much discount, then it's a perfect match.
How tokenization can help Gen Z get into the housing market, like tokenization of real estate and the Gen Z population, how it bridges the gap. That really got me intrigued and interesting viewpoint. So please shed some light on that. Hey Dennis, welcome to What Are You Tokenizing? Really glad to have you here today.
Hi Harman, thank you for having me.
Amazing.
Excited as well.
Amazing. So this is, I think, the 10th episode of What Are You Tokenizing? And it's an interesting episode for me, especially because it's not that common to come across someone who is building in the tokenization or blockchain space for so long. I have seen your experience and stories that you have shared over media outlets around the world. So before we get into the details of what you do and what exactly is Blocksquare and some amazing questions that I've prepared, if you can give a brief intro of your background, what you have been doing so far, and when you first encountered Ethereum and blockchain overall.
Sure thing. I think I've been dealing in my mind about tokenization since late 2016, early 2017, I would say. And what really kind of was I was struggling with is how to bring real estate on chain. And that was something that came, if I, do it backwards, the story, it came because I had made the first investment outside of my primary home at the time into real estate. And just a bit after that, that was like in 2015. In 2016, this thing called Ethereum came by. And so, it caught my attention and I started digging there. And that was kind of just burning in the back of my head for a while, I would say, for around a year or so. Bless you, by the way. And that kind of evolved then into Blocksquare over time, and we started Blocksquare officially in 2018. We'll talk about it more. Before that, I still am. I'm an entrepreneur by heart. I studied architectural engineering. So by degree, I'm an architectural engineer. I never really worked as an architect. I kind of finished my studies when the economic crisis came into place. And there was not many jobs or many ways to get experience in architecture. So the whole, construction market was really suffering in Slovenia, where I come from. And there was just, two things you could do. You could move abroad and hope you get a job where you can gain some experience, or you can find something else. And what I found at that moment is the restaurant business. I opened up a restaurant and kind of through that process learned a lot about working with people, about entrepreneurship, about the ups and downs, about pushing a company through bad times, about working without a salary. So a lot of things that I learned through that process. I mean, the restaurant is still very successful today, managed by its own kind of management and so forth. And it's actually, it's a Southeast Asian restaurant. I used to backpack a lot throughout Southeast Asia, and there was no such food in Slovenia. So it's, yeah. And from that experience, I then moved to another venture. We did energy certification for buildings. We grew into a company with around 15 to 25 people in a very short amount of time. That kind of got me a startup, in a way, experience of how things can move fast in 6 months. And then as well, I exited then from that venture, and that was about the time when Ethereum came by. So that's kind of a short story of my professional career. so far.
Amazing. Amazing. So, the reason I ask this kind of question is because there are many people in the Web3 industry who believe that, if you haven't started in Web3, like they think that they have started with Web3 and they can build good stuff. But it's very crucial to have an experience in entrepreneurship and running businesses to actually understand how Web3 can run as well. Because at the end of the day, it's also a business, right? If you are creating a startup, sure, dynamics are changed, it's new emerging technology and emerging markets, and every day there's a new jargon that you have to cross, but it's still the main thing that matters is the prior experience that shapes the future. And I was wondering how you got Blocksquare as a domain name, so you started very early.
Well, it's not a .com domain, it's a .io. But that was the trend back then. Trend. There was a lot of block companies, I would say, block this,
Yes.
block that,
Yes.
and block and square, and square meters were really focusing on real estate, and then blockchain kind of came in naturally. I think it was a good choice. We get mixed up with blockchain a lot of times. So I have a
Exactly.
friend of mine who she always introduces me, this is the owner of blockchain. And I'm like, no, no, that's not possible if the blockchain is done correctly and decentralized. But yeah, it's funny, blocks. Yeah, exactly.
Amazing, amazing. Look, definitely, that was a very attractive name for me to hear as well. That's why I was intrigued by that. So, how I came to know about you before, we officially started. I read only blockchain related things. I'm unable to read any book. I've tried a lot. Everyone says in an entrepreneur you have to read books, but I'm not able to. So I keep on reading whatever articles I find on the net. And there was one opinion article on Coin Telegraph, I guess, that I found. It was about how tokenization can help Gen Z get into the housing market, like tokenization of real estate and the Gen Z population, how it bridges the gap. That really got me intrigued and interesting viewpoint. So please shed some light on that.
Well, I think it's not just about Gen Z. I think it's Gen anything, right? If you look at money, like I had some clue about money when I started digging into blockchain. I think one of the things that Web3 brings to people is financial literacy in terms of education. You just need to read not necessarily books, but articles, information that you can find around to get yourself acquainted with finance more. Just, increasing that knowledge. And if you look at money, we all know that fiat is inflationary, and it just expands. So what it means is that this kind of creates, with $100, you can buy less than you could 20 years ago. And nowadays you can feel it, 3 years ago, you could buy less. And it involves everything, from food to shelter to construction materials, and work, right? Work is usually the last one to get compensated. So what means that people are always kind of earning less than, the inflation is happening for when there's bigger inflation situations like, the past few years. And what this means is you always lag behind. You always lag behind to be able to make that first real estate purchase. Here we're really talking about buying your first home, right?
Yes.
And that's really something that I believe is fundamentally should be possible for any human being to live in their own home, not rent, but live in their own home. I understand also the rental market. There's situations where for a limited time you need to live elsewhere, and that rental is great. There's situations where you want to spend, a vacation somewhere. Rental is amazing. There's situations where, you go study somewhere in another city for 4 or 5 years. Rental again is great. So both things should be there available for people. And when you introduce this understanding into any generation, you know that putting money aside, it doesn't cut it, because you put 10K per year or 5K or 1K, whatever amount you save, the interest rates you get on banks are lower than the inflation rate usually. So it means that you're just not able to, put enough aside to be able to make that first purchase. And so the only way for people to buy it is for previous generations to save up for them, to make money for them. And that's really kind of struggling when it comes to more people migrating around the world, etc. And so with tokenization, instead of saving in cash, you can start saving in real estate. And when you start saving in real estate, it means that you are hedging the inflation of real estate, right? In real estate. So you're always basically putting aside the exact amount you will need in X amount of time. And if you're able to liquidate that afterwards quite easily without too much discount, then it's a perfect match. It allows people to put money on the side, spend less, invest more in a safe way so that they can live normally as a human being. I think that's kind of summarizes it.
No, absolutely. And one key point that people don't understand here is that while inflation is rising, real estate is a good hedge because it rises with inflation as well. It's also growing in the market. If there was no inflation, real estate would not grow that fast. It would grow, but not that fast. That because more inflation, more people want to spend, more people want to increase prices, and so real estate goes up as well. There can be different correlations, but in a layman's term, this is basic math for us, right?
And a lot of people say, well, why real estate? Why is it, past performance is not future? And that's exactly true. But if you dissect the recipe of real estate, you have building materials, you have labor force, and you have land, right? So that's kind of putting it together, right? And when you see the market conditions for each of those elements, you see that it does capture the inflation part, in
Exactly.
different ways. And that's why inherently real estate has that quality. With gold, it's different. Again, with silver, it's different because you don't have the building materials, which don't involve industry, which doesn't involve, again, something that involves labor, etc. It's a different thing when you compare assets, and why real estate, it's a very nice mix. Plus, if it's built to rent out, it cash flows. The other assets don't cash flow, so you also have that element built in. And I think that's kind of a very, very compelling asset class. And the only problem is that it's hard to invest in real estate. It's not accessible to anyone. You
Yeah.
can't just put $50 every month into real estate. You can do it but you can do it with Bitcoin, for instance, which is unfair, right? So why wouldn't you be able to do it with real estate too?
100%. I see that vision, and you put it very rightly. Real estate is not just land that people believe, it's eventually something that's constructed over it, right? And there's building material, labor cost, all of these elements. Then there are costs to get it legalized as well. That's increasing every day. Taxes are increasing every day. In my area, I'm in India right now. I see that labor costs have been tripled in the last 5 years. Like what we used to get done for a few $100, we have to spend thousands on that, right? So there's a big jump. So that all constitutes. But this brings me to the next question. While I know now we are clear you're building in the real estate space and tokenization is applicable, and we are slowly getting to what Blocksquare actually does. The next step before we get to that is real estate in itself is a very big domain. Contrary to common belief that it's just property, it's a very big domain. There's a huge supply chain involved. Which particular element of that supply chain made you believe that this is broken? I need to have blockchain in it.
That's a tough question. I think within that supply chain, there's a lot of broken pieces. But I think when it comes at the end, when a property is built, when the property is managed, rented out, when it's finalized, I think in that step, um, in most places around the world, the chain is broken, or not the chain, but the concept, the transaction, but because there's only X amount of people that can enter into that transaction. So the democratization of access to that asset is then stopped. Even though you have, during the life cycle of building a real estate, you have people from different backgrounds in terms of wealth being able to kind of earn through that process. Because you have the worker, they get a salary for it. You have the developer, they make profits through it. You have the company that produces concrete, for instance. They make profits, right, etc. So there's a whole there's a whole kind of chain that is being able to benefit from real estate as an asset. But in the end, it's only, I don't know, 5% of the population that actually is able to own it. And I think that's broken. I mean, we focus on that one. So obviously I'm biased here in my opinion. But where do you see, maybe you've analyzed, you work as a consultant with a lot of companies, a lot of ideas on tokenization. Have you encountered interesting cases in this chain where you think things should be improved with blockchain?
For sure. So I definitely understand your perspective, and I'll not call it a bias. That's definitely one very crucial step in the supply chain, that ownership is limited because I'll say the conditions to ownership are so high that not everyone can reach those conditions. But for me, I used to look at from perspective that even after ownership, like even if a person fulfills those conditions to be an owner, after that
Mm.
he's stuck as well. He doesn't know what to do. He's not able to sell it off. He's not able to rent it out properly. There are so many disputes, and it can be a bias because of the area I live in India. There's a lot of such challenges that you rented out the property. Now the person who is renting it out just took it. You have to fight a case against it. Many cases come across everyday basis. So that's one part. So for me, it's more about how to manage that property later on, how to have that liquidity circle. If you have an immediate need, you can break open an FD, you can sell your bitcoins, you can sell your gold, but your property you feel like you cannot sell. So and immediately you cannot get the money back, and that's a big pain point for people.
So liquidity is one of the things I think that in real estate it does, and it goes hand in hand with access, right? Because you have the liquidity part and access are, opposite to each other but complementary. So on one side, the owner, once they enter into ownership of a real estate asset, as you say, might have that liquidity issue because in some markets, a specific type of real estate assets there's not many buyers. With tokenization, you can find multiple buyers because now access is granted to everyone who has the internet connected, and that's it.
Absolutely. And my idea stemmed from a perspective that there is a saying: if you make a want affordable, it becomes a need. And when it becomes a need, no matter what, people have to get it, right? So real estate, as you rightly started in the in the beginning, that it's people want to have their own homes, right? They should. It's a basic human need, and it has been made affordable through different financing options, which a person feels stuck in. And then after they use all those options to meet the conditions to own a property, they get stuck. That's why liquidity is so important for me. But I do understand your point in terms of ownership, that we don't even get to that liquidity problem. We don't need to get to that problem where people are stuck. Initially we remove the disease from the start, that okay, you don't have to get stuck, you just own what you can for now, right? That's powerful. In my opinion.
Yeah, I think here, you know, we analyzed markets, and every market has the same symptoms. Every market has a liquidity gap between, a minimum and maximum threshold of property value. So let's say, let's say I'm talking about investment property here, not homes or, single units, but just investment property. In the market where I'm from, Slovenia, that gap starts at 2-3 million euros for a property, and up to around 15, maybe 17 million. What I want to say is that within that threshold, there's not many buyers. There's not much liquidity. So if you buy a property there, what will you do as an investor? You'll try to get a biggest discount you can at the purchase time, because there's not many of you trying to buy it, because you know that when you're going to be selling it, you're going to have the same problem. So realizing returns on that type of properties is very hard. So consequently, there's not many deals in that range. If you go above that range, you have funds which invest in bigger properties. And when you go below, you have individuals that invest in those kind of properties, right? But in that mid range that I mentioned, and that's present in every market. And that's where I see tokenization can really bring liquidity, as you mentioned, because that's where you can then split a property of 5 million into 100,000 tokens, and anyone can own one or 0.02 tokens or whatever the amount they want. And now they can have exposure to a property that's really well managed, that has good returns on one end. Otherwise, they would never be able to access in a market that might be on the other side of Earth, of the globe, and that's, I think, powerful.
So can I assume this is what Blocksquare does?
We do this, but from a different perspective. We do this as Blocksquare. We provide the infrastructure for companies to be able to enter into this market in a couple weeks instead of developing their own tech.
Ah, okay. So you are kind of like a SaaS model for companies who want to get their real estate tokenized.
Exactly. If you want to, you know, start your
Basically,
online shop, if you want to start your online shop today, like I don't know, 25 years ago, you wanted to start your online shop, you had to do something like Amazon did, everything themselves. They became a giant. Well done. You know, today, most people who sell online use Shopify or Magento or something like that. So we're kind of the Shopify for tokenized real estate. You come to us, you get a white label marketplace, you're running under your own brand, your own company. So it's independent from us. You pay a subscription fee to us, and that's it.
amazing. So, which jurisdictions are you currently covering? So, I know there are a lot of regulations that are going to come into this. So, is it only European or worldwide?
We have clients that run marketplaces on our infrastructure from most places around the world. It's still a small thing. There's currently, I think we have 16 marketplace operators on the infrastructure. So it's still early days. But essentially, the way we tokenize real estate, so we also offer this legal framework around it. So it's kind of templated. So it's easier for people to execute. Covers, I would say, 97, 98% of jurisdictions around the world.
Amazing. That's really interesting to hear. I would love to check it out more in depth someday. A lot of real estate owners in India who want to explore such kind of an opportunity. That's definitely interesting to see. I don't know, rates of real estate in India are touching the sky as well as the whole world. Just close to my home, an area which was available for $1 million around 5 years ago, it's currently worth $10 million. It has skyrocketed in just 3 to 5 years. So that's why it's a growing need here as well, everywhere. I think around the world, that's a common movement. So I read somewhere that you have a token that represents your whole ecosystem. Is that token associated with the whole white label system? Like anyone who creates a white label gets access to that token, or it's separate?
Yes. A challenge when you're building something like Blocksquare in 2018 is that you know that the market's going to come. You don't know when it's going to come. You know you might be too early. So, but if you wait longer as a startup, you're going to be too late. There's a lot of things you need to learn. And what we did is we've essentially took the software license that, so the IP, the software license that our company produces, and we've tokenized it. And what this means is our clients are able to buy and hold a certain amount of tokens, and for every 10,000 staked BST, so if they are being staked, they earn some APY on top of it, but they get 10% discount on our services and software. And this discount goes up to 100%. So essentially, we have most of our marketplace operators, they actually have that 100%. So they become kind of this token holder nodes in a way that hold a token on a long-term basis because that gives them benefits on the software side. That's what one of the functions that BST as a utility token has. On the other end, it's also tied into the revenues that are being produced on the infrastructure. So if you imagine revenues are produced from transaction fees, so there's a small transaction fee for every built into every real estate token. And when this token's trade, that transaction fee gets executed. And then there's the recurring revenues that these properties make. And these recurring revenues are distributed in stablecoins. Now, The stablecoins go to token holders. So let's say we have a property and every month $10,000 gets distributed to X amount of token holders. And this amount of stablecoins gets to their wallets. But what we also offer is something that it's staking of property tokens. What this means is people can take their real estate tokens and earn BST instead of stablecoins. And what happens is this stablecoins that they forfeit in terms of getting returns in crypto gets into our treasury and buys back BST and burns it. So it creates a deflationary tokenomics on the token itself. This is kind of what utility currently is built into the token, but over time, there's more and more things that can be added and for tokenomics to be improved even further.
Understood. So, in a sense, when I see the two ends of this discussion, one for the original stakeholders who are using your software, and then the end customers who are buying properties through your software, the token is kind of like a means to include them in the whole process, to make them a part of the whole process, so that it's a, I'll say, a true economy in a sense, right? That buyer, seller, and consumer, everything is engraved into one particular area, and just having your token is something like, for a company, if it was issuing a share, they would have, again, if you buy the share, you become a part of the company in a sense. It's the similar thing, right? If I buy the share of an FMCG company, and I know I'm using that FMCG company a lot, although it's a big company, it's not just me buying which makes a difference, but if there are hundreds and thousands of people like me who are buying from that company and buying its share as well, it's like we are ourselves increasing the token later on.
I think it's like the analogy with the share. I wouldn't really make it because if you build true utility token functionalities into a crypto, then usually it doesn't give you the same kind of governance rights. You're not really a shareholder of the company, which doesn't mean it's less than being a shareholder. It can actually be even more because it gives you other flexibilities that being a shareholder doesn't. Like in most companies that are not publicly traded, being a shareholder is a very illiquid investment. It can be potentially very rewarding, but it's also a risky investment, right?
Yes.
And any angel investor who's invested in startups before knows that. Um, with with tokens, usually you have a market already in place, so there's avenues where this can be traded. There's certain volumes happening. And so it's kind of different, of course. It's kind of doing a reverse IPO in a way, where you can buy shares in a company very early on. There's, of course, a lot of risks involved. I see right now, because we're on the timeline of real estate tokenization where we are, I think there's a lot of opportunities in RWAs that are building in this sector to be accumulated. I think it's an accumulation phase where people are able to kind of earn more through staking products and stuff like that, to really kind of anchor themselves into various protocols. And once these protocols become utilized as expected, so once the market share grows or the market adoption grows, then this utility tokens should be, let's say, more in demand, you know, not use any other terms. And it's not investment advice, of course.
Understood. Understood. No, it makes perfect sense. I think why I use that analog, that example of shareholding is because that's worked a lot for me to help non-Web3 clients understand it at a basic level. Obviously, there are many more parameters inside, but makes it easier for them to understand. But I take that definitely as a good feedback that it can be thought of as a reverse IPO or a better version of a shareholder, removing all the challenges that typical shareholder has, and then improving the system in a sense.
Mm.
Amazing. So one thing, Dennis, that I have been wondering is, let's say you put a property on Blocksquare that people can buy from. How do you manage the price of that property? How do you identify what the property is worth?
Essentially, it just goes down to purely, a real estate valuation. There's international standards in place. There's certified valuers. There's nowadays as well software. And I believe in the next 5 years with AI, even more automated valuation models will come into place, and they're going to be instant and very, very close to the actual price. anybody who is buying and selling real estate knows that the price, the valuation, is what the market is currently feeling similar properties are valued at. But in the end, it's a negotiation. How quickly does the seller need to sell? How discreetly they need to sell? And how much the buyer is willing to pay for, and how many buyers there are to purchase a specific property. And that determines the price. What we do is we require the tokenized real estate property to have a valuation report. It needs to be made public, and the property owner decides what the token price should be. So there could be a NAV premium or discount, so to net asset value, and that's that.
So what I understand from this is it also gives an incentive to the property owner to bring his property on chain because he knows he's in control. Although he has to publicly share everything, he cannot just inflate anything, but he remains in control in a regulated manner as well, and he can just enjoy the benefits of the ecosystem, right?
And it's when you're selling a tokenized asset, what a lot of people miss or fail to see, because they're comparing it with traditional. So if I have a property that's worth 1 million, just to round things up, by our tokenization standard, it can be divided up to 100,000 tokens. So up to 100,000 tokens can be issued for this property, which represent 100% of the economic rights that derive from the ownership of the property. Now, what they can do is they can tokenize 10%. They can issue 10,000 tokens, and they can say, okay, we're going to issue the first tranche of tokens at a discount. So we're bringing this property on chain. We're fine losing 5% on it. Instead of selling them for $10 per token, we're going to sell them for 9.5. And so everybody, but that's only on the first 10,000 tokens. In the next tranche, we're going to do a next tranche in 6 months. We're going to sell them at 9.75, and then we're going to do it at 10. And so you can adjust the price you're selling for an asset based on tranches. It doesn't need to be all or nothing. And I think that's kind of a very flexible way of finding liquidity on the market and price discovery in a way, and rewarding those who early on, before any revenues are being distributed for an asset, to kind of de-risk them by offering them a small discount.
Absolutely, and that kind of like is a very sustainable way of managing supply and demand and generating interest on top of it, so that your property is actually very hot in the market and it should be increased in terms of value. It's not that you are saying it's 1 million now, it's 1.5 million tomorrow, but people are actually buying it because they know the potential, and that's how the price increases, not just because of your individual valuation, right? But
Exactly.
what I can see here is there must be checks in terms of when a person can sell his token as well, because otherwise there is a scope of manipulation as well, right? Let's say I have my own people set up who are going to buy and sell the token accordingly to decrease the demand, and then not have other investors buy the property, make it less lucrative to external investors. So are there conditions involved in terms of selling?
So when we're talking about selling tokens, there's no conditions. You buy tokens, you can sell tokens, right? If you bought tokens for 10, you're gonna probably want to sell them for 10, or maybe if we really need cash right away to make another investment, you maybe do it at a discount. That's your decision, and we all do it with any investments that are kind of similar to tokens or cryptos or. When it comes to the property owner, you have a requirement in the contracts that you sign. So in the legal part of the tokenization, the terms are really clearly defined. You can't tokenize a property and then detokenize it or sell it without buying back the tokens. You need to buy back the tokens. And with that buyback, your obligation is to buy them back at the same or higher price that you ever sold tokens for. So if I sold tokens for 10, I need to buy them back for at least 10 or more. Now that more part is negotiated through a buyback process with token holders. At the tokenization time, there's a buyback threshold that's defined in the contract. It means that I need to buy back X amount or X% of tokens before I can sell the asset. So that gives some kind of governance power to token holders, not on the decisions of the property, etc., but on the price. All of them agree for to be sell back the tokens to the property owner.
Makes sense. Makes sense. So my question is a bit from the other side, from a token holder side. Let's say I'm a
Okay.
token holder. A property owner lists his property for 100,000 tokens at 1 million valuation. I go and I ask my friends, okay, let's all buy the tokens at when they get listed, and then we restrict the sale of the property in the future. We don't
Mhm.
allow to sell the property. We are in control later on. So in that case, should the property owner maintain a good threshold of tokens in itself? Like he should not tokenize more than 50% of the property or something like that?
Well, it depends really, how you specify it. In our model, we always envision there's going to be a management component, so either an asset management component or a property ownership component. Maybe it's in the same company, or maybe it's split between a management company and owner, a holding company. But in any case, the equity portion should always be there. I think that's the only way of making tokenized real estate sound for token holders or token investors, because you need to have that other party that's going to bring returns, that's going to be signing contracts with tenants, etc., and
Yes.
then maintaining the property. You need to have them involved. They need to have a stake in that property, right? So we see that currently, based on how most capital stacks in real estate are structured, the capital stack means how much debt versus equity there is on properties. Usually, property owners are not really able to tokenize more than 20, maybe 30, 35% of the property. And the financial structuring behind the tokenization is very important, because you can't just say, hey, I'm going to tokenize 70% if you don't own that amount of equity. If you have debt on the property, you can't just,
Exactly.
tokenize. You maybe have 30% equity based on the current valuation. So that's your threshold. There then depends on the cash flows of the property, so that the investment is, so there's always, it's a very tight square. It's not like infinite amount of possibilities. There's usually just one solution, maybe two. And that's what we do as well. It's not just we provide software, but we make you understand what those confinements are, and we help you structure the tokenization so it really makes sense in the end.
I can assure you one thing, Dennis. If there are 100 people out there tokenizing properties, 90 of them wouldn't know this.
No,
That,
no,
that, that,
I know that, but this
That's
is
the
kind of,
market right now. I talk to so
yeah.
many people in real estate tokenization. Believe me, I've been traveling to Dubai quite often, and in Dubai, you meet a lot of people who are tokenizing real estate or who think they are tokenizing real estate. This is the statement they will not understand. They will say, "I am a property owner. Okay, I have loans, I have debt, but doesn't matter. I own the 100% of the property. I'm going to tokenize all of it, and then I'm going to default on my loan as well, right?" So that's a statement that people don't understand, but really glad to have these insights. This adds true value to the audience as well to understand it properly.
Yeah, yeah, definitely. I mean, there's a lot of, like I said, there's a lot of information when it comes to structuring real estate traditionally. And when you add tokenization to it, it's not a magic wand that you just wave there and then things disappear. There's financial obligations you have all along the way. There's tenant contracts you have in place. You can't just increase revenues 2x. You're not going to do it. You have a lease contract in place. That's what the market's offering. That's the valuation of the property. You might have discrepancies between cash flows if it's a certain type of tenants versus others, but these are the confinements. That's it.
No, amazing, amazing. That sounds great. And so, if we see this from a 30,000 feet view, these elements are not purely blockchain elements. These are external elements that define the life cycle of that asset on chain as well, right? So no matter what external elements are needed to make sure that the system is working intact, system is intact, right? At the same time, there are two sides of the coin, other elements which are restricting this, right? Let's say regulations, let's say payment integrations, or other any kind of adoptions. What is that one hurdle you believe, if it is resolved, will accelerate the adoption of real estate tokenization worldwide?
Well, that's $1 million question or $1 billion question, probably even $1 trillion question, I would say. I think fully understand what are security tokens, period. Like understanding what defines security tokens. I think in a lot of cases, like the way we tokenize real estate, the tokens that are outputted on the other end, at least by MiCA regulation, they're not security tokens. But regulators need to understand that. So dialogues with regulators. Once that is resolved, then, for instance, what we can offer to the market worldwide is tokens that are backed by real estate titles. Here, it's a big difference than tokens that are backed by a contract that is connected to a real estate asset. It's basically as a token holder, you get then the same security as a bank does when it issues a loan. It's the same amount of security you get. And in case of default, you are not ending up with a litigation and nothing, but you end up with, a true lien on the property title and a foreclosure. And that changes the game. And when that is widely adopted, you will see a lot of money being flown into this because there's going to be a lot of people that are going to see, okay, now this is properly structured. And I think that's kind of what needs to happen, and it's not far away. It's not so far away.
Absolutely. And on this topic that we are, I'll just like to show you something just to give you the idea why I know about your blog post. I'm just sharing my screen quickly. I don't normally share screen on any episode because it's not relevant, but I'll just share. So this is the one that you wrote. That's November 14th, 2024. Tokens will help Gen Z break into locked housing market. You see this article that I wrote. It's on my website. Told it is November 2023, but it is 2024, 24th November. Now right. So from 14th November to 24th November, I was doing research. I went through this, and one key thing I wrote in this article was that there are tokens can be classified only into two categories: utility tokens and security tokens, and we need to understand that properly. That security tokens represent an asset digitally. So I completely agree with you there. I think there's no doubt about that, but that's definitely a true statement, and that's a bigger hurdle than understanding the tech or anything at all. Regulators need to understand security tokens before the true adoption happens.
Yes, exactly. I think that's kind of key. Oh, nice coincidence.
It has been an amazing conversation, Dennis. I think these kind of insights audience can never get from any place, no matter how much you read. But, hearing you firsthand it made me believe that I need to start checking out where I can invest in a tokenized property right away. One last question, just out of curiosity. What is that one particular city or property that you would like to see tokenized on your platform?
Wow, the Eiffel Tower.
Amazing. That's a new one for me.
You asked what, which one? I think that would be like that would be the dream. But yeah, let's leave it at that.
And then it can have a lover's token.
Exactly. It would be, what amazes me is that there's a lot of real estate assets that nobody has a clue how much they're valued. And I think tokenization can bring a valuation layer that we have not, we can't reproduce otherwise with anything else. And I think there's this kind of assets that have historical value, that have monumental value. It's infinite basically, and there's a lot of potential there.
It makes a statement in the world that this is what the new normal is.
Exactly.
Amazing. It has been lovely having you here, Dennis. Thank you so much for sharing your insights. And I'm sure the audience also got a lot of good information. I will be looking forward to having more such interesting conversations with you in the future.
Arman, thank you so much for hosting me. It was a very, very pleasant conversation as well from my end. And keep doing what you're doing. I think educating the market is one thing we all of us should be doing more.
Absolutely. Thank you so much for that words, Dennis. Thank you.
Thank you.